Hey, this is Cedric Youngelman, your host of the Bitcoin Matrix podcast. Thank you so much for checking out my show, where we have philosophical conversations about the economic, cultural, and psychological implications of Bitcoin. Please make sure that you're subscribed to the Bitcoin Matrix. And if you're watching this on YouTube, smash that like button so that more people see it, and put those notifications on so you don't miss out on any fresh and dope content. This episode with Jonathan Chester, the CEO and co-founder of Bitwage, about getting paid in Bitcoin, is brought to you by River. Buy Bitcoin with zero fees on recurring orders when you dollar cost average at river.com. Truly the best way to build your Bitcoin wealth. River doesn't use or lend your Bitcoin. All Bitcoin at River is held in secure cold storage with 100% full reserves. You can withdraw your Bitcoin at any time. Unlock the possibilities of this revolutionary digital asset with River. Sure, you've bought Bitcoin before, but have you tried River? See and feel the difference for yourself at river.com. To get started and find out for yourself, use the link in the show notes to get $20 free when you buy Bitcoin at river.com or on the River app. There's no better time than now to get your sats off your exchange. My favorite hardware wallet is the Cold Card from CoinKite, and it's definitely worth learning how to use it. Built-in sleep at night technology, ultra secure signing device, aka a hardware wallet for Bitcoin. CoinKite is a leader in security and hardware manufacturer, established block 141,000. Maker of some of the most iconic Bitcoin products, such as OpenDime, the Cold Card, Sats Card, Tap Signer, Sats Chip, the Block Lock, and the Micro Block Lock. Check it out for yourself. Use the link in the show notes for 5% off your order. Don't trust, verify. TikTok next block. An idea whose time has come cannot be stopped. Join your fellow Bitcoiners in Miami Beach for the biggest annual celebration of Bitcoin in the world. Don't miss out. I can't wait to see you all there, and I hope we can grab an ice-cold beer in the sun. Join us in making history in Miami Beach this May 18th to 20th. To get 10% off your tickets and help support me and the show, use the code MATRIX. And if you buy a whale pass with the code MATRIX, just send me the proof and we'll go out for lunch or dinner in Miami on me during the conference. And now, let's enter the Bitcoin Matrix with Jonathan Chester from Bitwage on getting paid in Bitcoin regardless of your employer.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Jonathan Chester is the co-founder and CEO of Bitwage, one of the oldest Bitcoin businesses, helping employers pay their employees in Bitcoin. Jonathan, welcome to the Bitcoin Matrix podcast. How are you?
Yeah. Thanks for having me.
I'm excited to chat. I don't think I didn't bring it up in the pre-show though, but I am a client of Bitwage. I use Bitwage's services.
Oh, nice.
So I've been paid in Bitcoin, and it's gone through Bitwage. So I'd love to kind of get into how you even, what you were doing before Bitcoin even, because I know Bitwage is it's been around a long time, since 2013. So you were probably doing something before then. What were you up to, and kind of how you came along to Bitcoin?
Yeah, so just to adjust that a little bit, I have been into Bitcoin since 2013, but the company, the company's been around since 2014. So 1 year later. So prior to Bitcoin, I was working at Oracle. I really actually only had 1 year out of college before I started Bitwage, and I was working in sort of the open source sales division of Oracle for their Linux kernel and their virtualization technologies. And Oracle is one of these huge employers. Over 100,000 people work at this place, so you really feel like a cog in this giant corporate machine when you're there. And I spent pretty much every day, like trying to learn something new. And during, I guess, maybe the monotony of Oracle, I came across Bitcoin. And I just immediately fell in love around concepts of financial sovereignty, banking the unbanked, moving money across borders faster, cheaper, more efficiently. So I knew I needed to be a part of it. And back then, it was just I was just like thinking, okay, I'm gonna buy it, and I'm gonna try and convince everyone I know to buy it. And this was this was like there was like a bubble happening at that time. The price was jumping from like $200 to $1,000, right? And then Mount Gox happened, and Silk Road happened, and it crashed to like $300. So that was all happening around the time that I got into this. But I'm sitting here at Oracle. I'm telling everybody, you got to buy Bitcoin. You got to buy Bitcoin. And I ended up getting connected to a coworker who, was more from the technical side over there, self-taught coder, went to Stanford, and he happened to also be this crazy Bitcoin guy. And he was, trying to do, Bitcoin mining off of some really old mining machines that weren't profitable. But we got together, and we both knew that this was going to be the future, right? That Bitcoin was going to be the future of money. And we said, okay, how do we become a part of this? Like, let's look at what's being addressed right now in the ecosystem. And there were wallets and exchanges and merchant processors, but no one was really taking on the concept of, when a company actually has Bitcoin, like, how does it pay it out to its employees and essentially create its own financial loop, right? Like, the loop before Bitwage was you go to an exchange, you purchase Bitcoin, you then hold it, maybe you spent it with a merchant, and then that merchant, they're really, the only option they had was to then convert it back into dollars. And so we were like, okay, well, in order for Bitcoin to be able to exist inside of its own financial system, you need to have a part of the ecosystem that moves the Bitcoin from the merchant back to the employees. And so, okay, let's be the first ones to do this. Let's kind of solve this problem. And it was interesting, right? Because in 2014, I think this idea was pretty crazy. Because the problem that we were solving was we're solving a problem for like the concept of the industry itself, but it wasn't a problem that was like an actual problem at the time, right? There weren't companies that were accepting Bitcoin that then wanted to pay out that Bitcoin to their employees, right? All those companies, probably 99% of them were all like instantly converting it back into dollars, right? But we were kind of crazy enough to go off of this idea because we had been calling merchants who were accepting this, and they were saying, yeah, we would be open to paying their employees in Bitcoin, which turned out to be false, that they were not open to that when we actually launched. But what we found out was, scrolling through Reddit forums, and back then r/Bitcoin, it was like a real spot to learn about Bitcoin. And it was like a center, I would even say. Like, you had Bitcoin Talk, the forum, and you had Reddit r/Bitcoin. And so back then, you go there, and there were people who actually wanted to receive part of their paycheck in Bitcoin. And the way we were able to kind of sustain our business is we created a model where people could receive part of their salaries in Bitcoin without their employer signing up. And that's kind of what got us started.
Yeah. Wow. This does sound crazy because it's 2013. So, that is crazy because, I just can't wrap my head around this. What it must have been like fundraising back then to start this company and boots on the ground. It sounds 2 or 3, when I say epochs, it just sounds way early. Like, 2013 to 2017, I think, was a whole different era. And I wonder what it was like, leaving your I know you're a cog in the wheel, but that's considered by probably all your friends and family a good job to have. And here you are, Bitcoin's only 4 years old, 4.5 years old at this point. Is brand new technology and rails to build on. So what was if you could expand a little bit more, it seems like quite a leap and to be so young. And then what was it like to interact with either the traditional community, trying to get traditional employers to use this, or what were those conversations like? And, back then.
Yeah. There's a lot to unpack in that statement. But let's think about like the decision to just like go full time into this thing, and it wasn't taken lightly. I met my co-founder, and we kind of spent 6 months riffing and coming up with ideas, making sure we wanted to actually work on this together, right? And part of that process was, I was calling a lot of merchants to find out if they would be willing to do this, and we applied to several accelerators. There were 3 that were having continued conversations. It was 500 startups, and I can't remember if YC was one of them, and then it was Plug and Play. And I thought, we had something going with these guys. It might have been another accelerator too. I thought we had something going with these guys, and we're like, okay, well, to show that we're committed, let's quit our jobs and go full time in this. So we do that, and of course, one accelerator rejects us, the next one rejects us, and then it comes down to Plug and Play, which accepts us, and that was one of the first sort of lifelines to Bitwage. I think that if we had not gotten that, we would not have been able to exist, because they gave us some funding, they gave us an office, they gave us free food for lunch, and so it was, I was able to live off of my savings for a little bit. And fundraising was hard. We basically didn't raise any substantial amount of money at all until 2016. So it really took a while to do that, to get all that, to get that raise. So it's really quite hard. And one of the big things that happened during this time was Mt. Gox and Silk Road, right? And so during this period from that point until 2017, Bitcoin became this pariah. You couldn't actually talk about Bitcoin, couldn't talk about it with any stakeholders at all. You go to an investor meeting, no, we don't do Bitcoin. We're moving money, using blockchain value tokens. You were just kind of getting laughed out of the room when you're talking with those organizations. And a lot of what we were doing at that time was cross-border stuff. So people were actually, like, most of our volume was like people getting 100% of their salary in Bitcoin in cross-border, salary payments into Latin America or Southeast Asia. And so, talking to VCs, talking to banks, talking to potential partners, it's all very, very hard. So it was really just a pure organic growth play. We bootstrapped until about 2016. It took a year and a half to eventually raise $1 million. That money also kind of came in just in time. We were about to run out of money when that money came in. So that was also perfect timing. And then from there, we basically were able to get to profitability. So we became profitable in maybe the middle of 2017 or in 2018. And, we had obviously that big 2017 bubble that was very helpful. Then the crash after that. And at least after that point, Bitcoin was now cool. We could sort of talk about it however we wanted. We were able to kind of put that more front and center, because after 2017, even though the bear market had hit, there was just much more of a belief that this could really be a thing. Before 2017, it was really niche. And after that, it was, maybe it's still niche now, right? But there's big enough of a market for investors and partners to begin to experiment with this. But the community was really small back then, in the pre-2017 days, right? I mean, you just go to a conference and you'd be hanging out with like Brock Pierce and Michael Turpin, and we got to have meetings with the Winklevoss twins, and run into Brian Armstrong and Vitalik Buterin, and these kinds of run-ins would all just happen, right? So it was really like a small, tight knit community there. So then let's see. After we kind of got past that 2017 moment, the bear market came. Even though crypto was now mainstream, people were not ready for Bitcoin payroll, and these concepts. So it was still a bit hard for us. We kind of plateaued for a few years. What happened was in 2020, this kind of became the moment when things really clicked and things started the market began to move in the direction of people want to get their salaries in Bitcoin. Companies want to offer this. And so all of a sudden we start growing. We've been growing 100% year over year since then. And we were able to, close what we're calling a seed round last year. So yeah, things are now on the up, which is great.
Awesome. That's a wild journey. I want to touch back on what you mentioned there about cross-border payments. So going back to even some of the early days, I'm sure, or I'm guessing it's still happening, but what kinds of people were getting these cross-border payments? You said to Latin America. Is it remittances? Is it wages that are, somebody's paying wages, distant wages to someone far away? A combination? How did you kind of come across this trend and approach this market?
Yeah, and it's actually a big part of our business. During the bull markets, we see a lot more like this domestic people want to get a portion of their salary in Bitcoin, and in the bear markets, they stay, but we don't see like as much like new companies wanting to offer it. But there are plenty of companies that want to sort of pay internationally and have easier ways to do that and facilitate that. But what was happening back then is, we had this product where, any person in the world could receive part of their salary in Bitcoin. And there was a group of people who were getting their entire salaries in Bitcoin. And we recognized that they were all freelancers in outside of the United States who were invoicing clients with our technologies and then getting paid 100% salary. So, software developers, marketers, designers, any of the classic freelancer economy type jobs, those were the ones that we were seeing. And so one of the things that we actually worked on at that time to sort of capitalize on this more was we knew that a lot of these people, they were not actually keeping 100% of their salary in Bitcoin. They would sell the Bitcoin in the other jurisdiction. And not only were they getting a benefit because we were able to offer better rates than like traditional financial institutions and get money into people's accounts faster, but also there tends to be differences in the price of Bitcoin in different countries, and in countries where there is essentially like a liquidity crunch on dollars, because people are experience bad fiscal policy and high inflation locally, and they're trying to get dollars, and there's a liquidity crunch that causes a premium actually to exist on the price of Bitcoin. So we saw people basically doing this in order to get even more money than they would through, like, even if they were to get like literally a free transfer from from like a system like Wise or something like that. So when we identified that, we decided, okay, well, let's use Bitcoin as like a mechanism to move the money from one country to another, and then people could choose to get part of that as local currency into their bank account. We would handle that side of it just to create a better experience, and that ended up being a big part of the business.
Yeah,
at that time.
So that's interesting. Kind of thinking about the other way though. So we mentioned there, I mean, like as employees, you had or like a lot of people, freelancers, and just kind of like doing kind of the pull effect. And you pay me in Bitcoin, and I can then solve these different problems. What about like what kind of companies are adopting this? What kind of trends or what kind of anecdotal stories you have there around the companies that are kind of pushing this technology on employees?
Sure. Yeah. So I would say that companies are not trying to push this on
Not so much the
employees
word
in
push
so
like
much as
force or coercion, but like more like we're offering rather than the employee
yeah,
saying, please do it for me.
yeah. Uh, you know, we most of these companies, they are actually funding with fiat currency. Like the companies that want to use us, I mean, we have some that want to fund with like Bitcoin or stablecoin or something like that. But the majority of companies are coming to us because they want to offer the benefit and they understand the benefit, or they've learned the benefit from us. Um, but they just don't know where to start because you know, when you are actually handling like the Bitcoin directly yourself, there can be issues. There are issues related to like the operations of it, the financial risk, you know, dealing with the security of, you know, public key exchange and storing your own private key or whatever, or securing even your custodial account. But then there's also like you know, other business issues like, okay, now I touch crypto. How do I record that in my accounting system? You know, how do I account for any tax issues that may have come up? So we kind of package this all together so that none of that, you know, you don't have to worry about any of these, you know, different elements that you might have to think about as a business onboarding and leveraging this. So you come in, you fund with fiat, dollars, pounds, euros, Canadian dollar, whatever, and then the workers are choosing how they want to get paid, right? Whether it's Bitcoin or whatever.
Right.
And so a lot of these companies, of course, you know, we see companies in the cryptocurrency industry. I think that tech companies. I hate using the word startup actually because a lot of these startups are not startups, right? Like, sure, like Bitwage could be a startup, but it's also been around since 2014. But so we have like there's technology companies. There's also professional services, and I think that this is a you know, quite an interesting one. That there's just a lot of like these sort of outsourced professional services that they themselves kind of have a degree of outsourcing, and we're bringing these two kinds of clients on board.
Yeah. I mean, I remember I've been CFO and controller of various companies. I've run payroll and human resources from different aspects. And it's kind of be frustrating. It's sometimes very frustrating dealing with traditional finance and these services. Does this sort of abet any of their issues around like time and expense, you know, versus using sort of the traditional rails?
Yeah. I mean, so our system has, you know, a lot of different components that are designed to let you have, you know, high quality reporting multiple different ways, so you can get reporting on like invoices on a per transaction level, on a per payroll level. And you know, for businesses, like the reporting is very important. We make it very easy for you to aggregate different kinds of transactions into a single transaction, so you're able to, you know, pay different kinds of employees, different kinds of transactions, expenses, whatever, aggregate them into a single transaction. And so, you know, you're saving a lot of time and effort from that perspective, in addition to, you know, how you fund it. And of course, you're doing just a domestic transaction, you know, a single domestic transaction, which has the benefit of being lower cost, right? So it does. It saves time, it saves money, and it gives your employees, you know, kind of like the freedom to get paid how they want to get paid, right?
Yeah. How is remote work sort of affected Bitwage and sort of the people that kind of want to use this service?
Yeah, I mean, there were three kind of effects from COVID that resulted in accelerators for our market. So the first is what you sort of mentioned, which is remote work, right? So as remote work has kind of grown, We see more companies paying workers remotely, like abroad, but we also see companies looking for remote friendly benefits as well, which this is a remote friendly benefit. And there's another effect which have been making companies seek, more benefits, which is this concept of great resignation, where it's just become a lot harder for companies to retain and acquire new talent. And so companies are now kind of seeking new benefits that can make them attractive. And this happens to be one that's attractive, that's remote friendly, is one of the highest opt-in rates of a sort of what I call a voluntary benefit. Not a non-voluntary benefit would be like healthcare, right? And then like one of the lowest cost ways that you can do an offering like this. And so it just kind of made sense. And then finally there was like the crypto boom, right? I know that the word crypto can be offensive sometimes, but it was a boom, not just for Bitcoin, but for like this entire kind of market of like Bitcoin, crypto assets and what have you. And that whole thing just brought a whole new attention to this concept, right? So these three forces coming together are kind of what helped to excel us and push us forward.
Yeah, for sure. And I remember, like, specifically, I mean, I've seen so many. So I'm holding these articles here. NFL defensive end Alex Barrett is taking 100% of his salary in Bitcoin, and this one here, first female UFC fighter to get Bitwage Bitcoin paycheck through Bitwage. In partnership with Bitwage, Luana Pinheiro will become the first female UFC fighter to receive a paycheck in Bitcoin. Yeah, it seemed like almost every week or every month there was another athlete or celebrity who wanted to get paid in Bitcoin. Do you think that's going to be not so much, I'm not getting at maybe Bitwage's business model, but in terms of cultural awareness and cultural permeation, do you think that is something that's really like going to be important going forward for Bitcoin?
Yeah. I mean, I actually don't look at athletes as like I don't look at going after the athlete market as something that is like a high revenue business for us. It's not. The reason to go after it is because of the awareness that it brings. I view influencers like athletes as important for creating education in the market. I think that there are several issues around Bitcoin mainstream adoption, and really how we get it to a point where it's decoupling from US markets, right? Because we've seen in the past that Bitcoin has decoupled from very many markets. It's decoupled from the Chinese markets. In 2016, there was this slowdown and Bitcoin was going up. We also saw Bitcoin respond positively when Brexit was occurring. Also, we saw local events when Bitcoin was responding positively in Brazil when actually Lula got kicked out for corruption, or when India demonetized the top two largest bills in circulation and basically made like 80% of cash like not usable. So we see all these events of these like macroeconomic events that cause Bitcoin to cause people to kind of move to Bitcoin. What we haven't seen is that effect happening with regard to the U.S. markets. It seems to be matching that. And at the end of the day, it comes down to the degree of adoption that we have, and that degree of adoption is all around education. And I was just speaking to someone earlier that for the three areas of education, one is we need to just have like a degree of trust, or like the average everyday person just doesn't trust Bitcoin because they don't understand like how Bitcoin could become stable, right? How Bitcoin could become sort of this natural hedge against essentially rampant money printing, right? And so it becomes a lot more speculative in nature as a result of that. So I think that the halvings that are occurring are a great test to see like how close we are to the point where we can see a true decoupling, because the higher up we go in a after a halving event, sort of the further away we are from that decoupling event. In that as long as we're getting like 2, 3, 5, 10x multiples, that go up, it also means we're going to come down, right? We're going to come down less than we went up. But if we're getting such a high exponential, it's gonna come down, because there's like the natural growth and then there's the hype, right? What we want to see is that the hype is not very significant against the actual natural growth of what should happen, with this deflationary asset when that occurs. And so that will be indicative of how close we are to this decoupling event. And I think that it becomes a self-fulfilling prophecy in that, because when that supply crunch happens, we don't see such a high up, we won't see such a high down, and then Bitcoin will be perceived as much more stable, right? There are a couple other pieces of education that are very important. I think that a sub piece to this concept is just the volatility, like educating on volatility, right? Of course, we're volatile now. There's price discovery. It's early. You're getting in now because we haven't reached sort of this apex of like mainstream trust in Bitcoin, which means that there is still like an outsized gain. It's actually not a hedge right now. It's an investment, until it gets to that point where it is a hedge. And sure, it can be a hedge in certain circumstances, but what we're seeing is it's not yet a hedge against kind of U.S. macro events. The next thing is public-private key cryptography. I mean, this thing it just sounds scary, right? I mean, I never had any idea or concept of what this is until Bitcoin, and so we need to kind of get to a point where people don't need to know about public-private key cryptography. And this is not to say that we don't want that everything should be custodial. I do not believe that people should have the choice of custodial versus non-custodial, but we can create systems that make it so that you unless you're like an expert, or you're having such a great deal of money, like you're a billionaire, right, and you have your money in this, you probably want to know about these concepts. But until for the average everyday person, we can design a system where you don't need to know about these concepts. The systems sort of have the backups in place to kind of help you figure that out for yourself. One of the things that we did at Bitwage recently, we created a program that partnered with Casa and with Edge Wallet, where you can actually just like scan a QR code to get the wallet and scan it again to pass the public key to us. So you're removing, for like a new person, the concept of like finding a public key and pasting it somewhere, and like even having to worry about, am I going to lose money if I do this wrong, right? Because some people might not even realize that they're going to lose money if they do that wrong. So just going back to the point of athletes. So the goal of athletes, the point of working with athletes is to increase education, increase awareness. One of the things that we do, at least with the athletes that want this, is we'll actually go in person. We'll teach them about Bitcoin. We give them a Bitcoin standard book by Saifedean. We will set them up with a hardware wallet if they want to, and kind of just teach them how to be self-sovereign should they want to be, and that helps them kind of be an ambassador and an educator themselves for their their fans.
Yeah. I think athletes are an interesting breed for a couple of reasons. What's his name? NFL player Alex Barrett. He said, I stumbled across Bitwage in a Twitter Spaces room a few months ago when they announced that they were supporting UFC fighter Mateus Nicolau. I'm not sure if I'm saying that right. And his journey to get paid in Bitcoin. Right. Barrett said, I was amazed by how Bitwage set this guy up so easily and with VIP service. I thought, why not me? The reason I think athletes, and I would even include entertainers, are really interesting. One is they're making a lot of money, or at least some of them are, a few of them are, or they whatever money they're making, it's a shorter window. And so if any of them are thinking about how to manage or maintain or sustain their wealth, they got to put that money into something in today's environment. And so I think that's interesting because they kind of have the melting ice cube problem that Michael Saylor has, that not a lot of people who may be living paycheck to paycheck do. But then they also just bring so much awareness to their actions. The public sees it, and I think they just have so much influence. So I just always think it's really interesting because I don't like the idea of, I'm not into influencers, but I do think influencers influence. So, and it's great when, I never know any of these people, but you get an idea, like hopefully you think that one gets it or this one gets it. And so when they do get it, it kind of just brings so much attention. And I love when they shine a light on Bitcoin. I'm kind of curious, you were mentioning education and volatility there. And so even just, getting paid in Bitcoin, how do you educate around dollar cost averaging?
Yeah, I mean, I think that we do a bit of education around dollar cost averaging, right? Because when you get paid a part of your paycheck in Bitcoin, this is dollar cost averaging, right? And we actually have a dollar cost average calculator, bitcoindollarcostaverage.com, that you can go and check out. I think the best thing that I like to tell people, is if you look at the 2017 bubble, right? And you decided to go in at the top of the bubble. If you look at, and you look at the calculator, right? If you put, all the money that you wanted to invest into Bitcoin at that moment, right? Well, first of all, for a long time before 2020, you were feeling very bad, right? Because you put so much money in this asset, and it had been down for so long, and it just doesn't feel good. And usually when you do your first investment into Bitcoin, you're just not ready for that moment to have realized that you put a bunch of money in at the top, right? But if you were to start getting your paycheck in Bitcoin, even if you're doing a large amount, 25 or 50%, right, of your paycheck in Bitcoin, you were feeling much better about that. Not only did you do better, not only would you be doing better now, but you would also not be feeling as bad during that process, because one, you're buying when the price is low, right? You're buying when the price is low, and two, you put less money up front. So if you decide, you know what, this is too risky for me, this thing just lost 50% of its value, I can't, I've got paper hands, I got to get out. You only committed, a much smaller portion of what you would have done. It hurts a lot less, right? So you're taking less risk, but you're still getting access to that upside, right? I mean, obviously, putting all your money in at the bottom is the best thing that you can do. But if you're afraid of accidentally hitting the top, or if you're just afraid that you haven't hit the bottom and it might go down more, starting to get your paycheck in Bitcoin, a small percentage of it, is going to be one of the best ways to take advantage of that and not sort of have that risk.
Yeah, I mean, I think it's just so important to have that conviction during the bear market. That's what really makes it truly a grand opportunity. And most people, I guess, they gain conviction through price going up. So, that's why they come in at the top. I'm kind of curious, who do you think of as your competitors? Is it the legacy payroll companies?
No, I look at legacy payroll companies as people that we can collaborate with, actually. I mean, I think that maybe the mindset of of the companies are almost like competitors, right? And because they're just so conservative, and we're trying to bring a solution to them that's going to be very valuable for them, for their customers, for the workers who get paid. And they have this kind of conservative mindset. So that in itself is almost like we're competing to break that down. There are, of course, platforms out there that have like this direct deposit functionality out there. I think there's like Strike and Coinbase and maybe NYDig that have these functionalities. And so Bitwage is not a wallet. We don't have a wallet. You can't store your money with us. You're actually forced to come up with your own wallet and get a deposit into your own wallet. And this is very important for a few reasons. One is, as regulations become more and more intense, it's going to be harder for you to get your money off of exchanges. So if you're getting your paycheck directly into the wallet that you want, you're gonna have you're gonna have the money in the place that you want. And I'm all about self-sovereignty. I'm all about like giving people the freedom to be self-sovereign should they want to, because at the end of the day, this is kind of what the most important thing about Bitcoin is. It's not totally dollar go up. It's like, put a gun to the CEOs of all the financial institutions. I still get my money at the end of the day, right? So we want to make sure that we have a system that is going to enable that level of freedom now and forever. And so one of the things that just kind of makes me sad to think about is, okay, what if like all the payroll organizations integrates like different wallets, and all of a sudden like you have this fragmented system because you were working for this employer and they were getting now you get your paycheck in Bitcoin and NYDig, and then you work in this employer and now you're getting your paycheck in Coinbase, and now you got to have like 10 different wallets or whatever because you worked for 10 different employers and they all had systems that were paying into different wallets, right? And so this is like a not an interconnected system, totally fragmented system. And I think one that creates inefficiencies and likely is going to increase costs at the end of the day for the entire system. Instead, I want to make sure that we enable a functionality with all these organizations where people can get paid where they want. And it's not just non-custodial wallets. I mean, I think that every bank and financial institution and even like major tech companies like Google and Meta, whatever, they're all going to have their own wallets. They're all going to have their own wallets. And people are going to have their preferred wallets like they have their preferred bank accounts. And we're going to need a system that actually works with that, right? Because you don't get a paycheck today into Wells Fargo and told if you want it into your Citibank account, you got to withdraw it through, you're just given account and routing number, right? And we want to make sure that same, flexibility exists for all of crypto payroll.
Yeah, I'm kind of. How does that? Maybe you could elaborate a little bit more. So what does that mean in sort of? So what does that solution look like? Back of the napkin, is it? Everyone is going. Yeah, I'm kind of. I'm a little confounded. How does that look? Like,
well, yeah. I mean, basically, you're just connecting your wallet to the payroll system and saying, I want 20% to be in Bitcoin into this wallet, right? And Bitwage will be powering the several parts of the system, the wallet management, the wallet connection, the conversion process, and any other sort of regulatory detail that might be required for that whole thing. And our goal is to essentially make that super simple, super seamless, and available everywhere.
Yeah. And then how are you guys been? I noticed you guys were the first payroll transaction on Lightning.
Yeah.
So tell me a little bit about that. How'd that come about, and what has it been like working on the Lightning Network?
Yeah, I mean, like everyone in Bitcoin, I'm really fascinated. I love Lightning technology. It's really quite amazing just how fast, right, the money can move on this system. So we haven't rolled out like to everyone this Lightning product because I'm very particular about how I want it to be. I don't want to have like a lock-in to a particular wallet. I want to make sure that you can't mess it up, right? And through this POC, we realized there's some difficulties around like crypto payroll on Lightning. So just to explain what we did, we got a professional athlete and the CEO of a Nigerian Bitcoin exchange to get their salary on the Lightning Network. And we had one person who, just got like $500, and then another person who got, much more than that. And we found that when we were getting to these higher amounts, we were running into all sorts of liquidity issues on the network, right? We actually had to connect with the guys. I forget why can't I remember the name of the guys? Well, we connected basically with I think it was the Phoenix wallet guys. And they hold like one of the biggest nodes on the Lightning Network. And so we had to connect with them so that we could route through them to be able to pay the paycheck. And we had been trying through like several different nodes, and we were just having all sorts of liquidity issues getting it done. So and it was important for us that we didn't just like open a channel and like pay someone. We wanted to like route it through the network, and we wanted to make it so that they could instantly spend it like through the entire sort of like Lightning hive mind, right? Because otherwise, like, you're not really doing anything for real. I mean, anyone can just create a Lightning channel and send money through it, right? So we wanted to make sure that if we were doing this POC, that we were doing it right. And so it was really hard. It was hard to get it done. There are a few issues that we figured out, which is one is that Lightning is very much a pull mechanism. Like if I want to pay you, you send me an invoice and I scan it. It's not very good for passive deposits where you're not paying attention, right? You don't want to like have to approve accepting your payroll every paycheck, right? And then the other issue was this liquidity thing, right? And what we want to make sure we can do is that you can have this passive system that that it can be paid to a multitude of different wallets, and that it can be done in a way where we're not hitting routing issues, and we're not causing any kind of like imbalances for you as the user who's sort of getting paid in Lightning. So it's starting to seem like we've gotten to a point of maturity that we might be able to maybe create a more available version of this product, and it's something that I'm seeking to implement sometime next year.
Yeah, it's fascinating to see the technology scale from, I mean, being around since 2013, layer one, and how that's evolved. not so much from the protocol level, but just in terms of, sort of any minor improvements to the protocol since Satoshi released it, and then just the evolution of Lightning. And I'm kind of curious what maybe your personal journey's been like. Has Bitcoin changed you at all? And I wonder in the sense of like, not so much like when you found it and changed, obviously, your career path and your life's journey, but along the way, have there been epiphanies, down the road, and has Bitcoin hit you in different ways?
Yeah, I mean, I think that I had several epiphanies just like from learning about Bitcoin over time, right? Because when I first started, I learned sort of the talking points at a high level, and it took, I don't know, maybe like 3 or 4 years for me to like commit into learning like it on a more technical level, and just like trying to understand like the like get to the point where I actually understand the entirety of the white paper. Because when I first read the white paper, I understood like the first page or first 2 pages, but then once it got into the mechanics, I got lost. And then one of the epiphanies was when I dove deeper and like actually learned like how brilliant the white paper was, and how rock solid the technological concept of it really was, right? um and what that helps me appreciate Bitcoin more, because all of a sudden I got to this point where I could understand things at like an architectural level, at a consensus level, and then look at other systems and understand why other blockchains are inferior, at least at being money, right? um I think that there's a whole debate to be had of like, obviously you want money to be totally decentralized, right? You might argue that, if you have something that's not money, maybe you don't need total censorship resistance. And so maybe there's a reason to have something else as a result of that. Of course, I haven't really found that much to really get me that excited, but getting to understand that helps me, better understand like why, like how people are sort of lying to themselves in like the shitcoin side of the cryptocurrency market, right? How when they make these sort of promises of efficiency, like they don't even really understand like what it means to have efficiency on a blockchain. And So that there was certainly that. One of my favorite educators in the space is Giacomo Zucco. And so meeting that guy kind of made me feel more in tune with my Bitcoin roots. I don't actually call myself a Bitcoin maximalist. I just consider myself an affinity towards Bitcoin maximalism. I think that Bitcoin maximalism is like, it's Bitcoin like no matter what. And for me, it's more like the Bitcoin's the only thing that I've seen that I really like makes sense, but maybe there is something else out there. But not, none of this other stuff actually makes sense when you think about it at a protocol level. So, another thing is like, I go to these conferences, and sometimes I go to something like Consensus, right? And then I'll go to like something like the Bitcoin conference, and at Consensus, I'm almost like grinding my teeth having conversations, because there's a lot of like an anti Bitcoin mentality, or like a pure like DAO shitcoin kind of mentality over there. And then you go to like a Bitcoin conference, it's almost like a sigh of relief, actually hanging out with people that understand this stuff. So another way Bitcoin has affected my life, I mean, I met my wife at a crypto conference. So we've got a little Bitcoin baby, I guess, running around now. And yeah, I mean, I'm excited to. Well, I'm both excited and scared to see like the future of Bitcoin, because I actually don't think that Bitcoin is just going to like eat all of the financial system in the world. I think that there's going to be like catastrophic events that occur that cause like people to understand the issues of the US dollar, essentially. And that's going, and then from the ashes of the US dollar, Bitcoin will rise, as opposed to like Bitcoin like taking out dollar directly, right? So I'm excited and also scared, right, to see that happen, right? I think that the whole concept of like US Treasury bonds are zero risk assets. Let's build all of our financial models on top of this layer of like, Treasury bonds are riskless assets, right? It's kind of like saying that DeFi is riskless, right? It's actually not riskless. So what assumptions? How are these assumptions, when they break, going to actually ripple throughout society, right? So I'm scared of that, but it gives it creates the opportunity for Bitcoin to rise through the ashes.
Yeah, there's a lot I want to address there, but I'm going to ask you. I mean, you said you brought up the scared thing, and having been around so long, I mean, I'm curious. Did you think this cycle would have had a bigger blow off top? Are you surprised by what looks like 6 ways of Bitcoin being a stable coin in a very pernicious environment? And yeah, I guess, what do you think the next 5 or 10 years are going to be like? Do you think it's going to get really dark? I like the point you made about treasuries being, the risk-free asset. And that's sort of what I learned in my bachelor's of science in finance. I said science there on purpose. It wasn't bachelor's of arts. And my master's of science in accounting. And they teach you the treasury, it's a risk-free asset. And that just doesn't make any sense in any sort of real world. And I'll even throw in with the crypto stuff. I mean, when I came to crypto, I didn't understand the difference between Bitcoin and shitcoins. And I thought there was technology to be explored in shitcoins. And to your point, I mean, I can't prove a negative. Maybe something will come of that. But I do think, as much of a distraction and all that is, I think it's a natural outgrowth. I think stable coins make sense in our world. They're just representations of something that's in the traditional financial system. So, that system's digital as well, but let's call it the digital manifestation of that. And I think that makes sense because it helps people get around a lot of the traditional financial system's limitations. And I just, whether that's a shit coin or an altcoin or a scam or whatever, I think that just makes sense in this transitional period. And then I think the exploration of blockchain, I think, was a really interesting rabbit hole experience. I came up kind of zero there, and even you could say I lost a lot of money, but I got an education out of it. And I feel like blockchain isn't going to solve problems on its own. I feel like I came to it thinking it's technology, but I think Bitcoin is the technology, and you can't sort of separate blockchain out. I think, why not use AWS or any of these other systems for a database? So I guess my question to you is, the main question was, how dark do you think this is going to get? But you could address anything there that you want.
Yeah. So I like to separate Bitcoin and cryptocurrency, also stablecoins. Because I think of Bitcoin as money. Like, Bitcoin is money, and it is the best form of censorship resistant digital money that exists. Cryptocurrency, it's not money. So you could argue that Ether has a utility, and the utility is that it enables shitcoins. So, but but you know, a lot of I actually don't really like that Bitcoin gets compared to like all this other stuff. You know, most of this other stuff, let's say it's like, I don't know, like you know, a lot of it is they're actually just like an arbitrage of securities, right? Like you know, if you're buying like a helium token, you know, some really dirty shit coin, right? And if you're buying one of these things, you're not buying it to like use the network. It's not like, oh, it's a
Right.
utility coin, I'm buying it to use the network. You're kind of lying to yourself. Oh, it's a utility coin, but really you're buying it because it's kind of like a security. It's meant to go up in value as the company gets more usage, right? So you know, maybe the scam there is that you're tricking people into not realizing that they're buying a security, or lying to themselves about it. But you know, maybe there's some reality to like, well, actually, you know, there's nothing wrong with buying a stock. This is just like, you know, a stock that you buy that no one has, you know, determined legally as a stock yet, right? And as you said, you know, okay, so then why not just do it on AWS? Well, then the argument there is like, oh, well, it's kind of like a VHS Betamax thing. Like, sure, VHS was less value, was not a good technology compared to Betamax. Like a blockchain is not a good technology to a traditional database, but it just so happened there was some network effect there. And so when we think about darkness, let's not think about like the general macro world. Let's think about the crypto world. I believe that we're not going to see like Bitcoin just like take all these guys out. We're actually going to see that this whole sort of non-Bitcoin cryptocurrency world is going to like become very prominent, and then it's going to like be found out that the systems can't actually handle what they're promising, and that's going to cause like a huge 2008 style financial meltdown. You know, some people are like, oh, didn't that happen already? I'm like, no, like the crypto market went down, it didn't affect like everyone's livelihoods, right? So that's another fear that I actually have,
that it'll get bigger and then crash again.
Yeah, exactly.
Right, because it wasn't. I don't think it was big enough to really be a macro event with what happened with Luna and Celsius and everything.
Yeah. It was just an event within the crypto market, which had a lot of money, but wasn't causing, you know, mom and pop shops to close down, right? So I think that there's still another leg up. But you know, again, like learning Bitcoin helps me understand that's a real risk, right? You look at, you know, these promises of like, oh, blockchain is going to become the supercomputer for everything, and like because you don't have a centralized service for, you know, controlling the servers and the databases, that somehow we're going to get like an incredible amount of efficiency out of this. And then you look and you're like, okay, well, like what is a blockchain? It's just like, you know, a computer that is running all the applications and talking to other computers that are running the same exact thing and trying to agree that they've actually run the same exact thing, right? And so how can like average computers run all the applications in the world? It's not going to happen. You're going to need like, you know, bigger server farms than AWS, and then at that point it's like, you know, you're just having a bunch of AWSs trying to confirm that they are all doing the same thing instead of just running themselves. So it's just you know, it's kind of an odd thing that I feel like a lot of people don't realize, but you know, could get bigger. I kind of think it will get bigger. You know, and maybe there will be some actual use cases that come out because, you know, VHS did better than Betamax and was fine, and maybe something like that's going to happen out of this. But at the end of the day, I think none of that should affect what's happening with Bitcoin. You shouldn't even look at Bitcoin comparing it to these things. You should be looking at like US dollar, Bitcoin, pound, euro, right? Like this is really what Bitcoin's up against, right? I almost like I don't even care if one of these other coins ends up having a higher valuation than Bitcoin. I mean, it shouldn't. It's silly. That shouldn't happen. But that would be like saying, oh, the value of Tesla is now higher than the market cap of pounds, and you're just like, well, so what, right? So, like
Yeah.
you're not, people aren't buying Tesla in the same for the same reason why they're buying pounds. It's like an apples and oranges thing.
Yeah. Yeah, I mean, to go off on that, I think that there is a strong element of these being illegal securities. And I think that if Vitalik had a good enough idea that he could legally profit from, he should have raised seed money. And I think that the fact that these things are allowed to go on, because I think that these things calling themselves cryptocurrencies is a misnomer to associate themselves and be an affinity scam on Bitcoin, because I don't think they are actually cryptographic currencies. I don't think they're currencies, and I don't think they're cryptographic. And in the sense that they're mutable. And I think the DAO attack on ETH proved that. And so I think that they're allowed, that the fact that they're allowed to go on makes me think they're a state-sponsored attack on Bitcoin. And the attack is on retail, not corporate and governments, but the attack is on retail in the sense to confuse retail, to take money from retail, and to dump on retail. And sort of I remember the appeal of Ethereum in the ICO, and it appealed to me was, oh, I can partake in these fundraising rounds and not be excluded because I'm not in Silicon Valley, or I don't have a certain net worth, which is what you need. You're not an accredited investor. But so but I think that because these things had pre-sales is what makes me think that they're truly illegal securities, and that they were just that's part of the mechanism of dumping on retail. And I think that one of the reasons I think they're allowed to continue is I think, to your point, I think that these things will rise again. I hate to think it. I didn't think it would happen again last time, and so I'm probably going to happen again. And I think that part of that is eventually, I mean, I think they want to use these things as surveillance coins, and I don't understand why they want to, in the sense that I don't know how this gives them better technology, but maybe it's something they could sell to the public. I don't know, but I after my own exploration, I don't know why the authorities haven't cracked down harder. And I'm not rooting for regulation and for government intervention per se, where it's not warranted and we don't need it. But I think if something is illegal, we won't necessarily need to prevent people from doing illegal things, but after they've done something illegal, I think there should be consequences. And that's not so. I'm not saying the stable coins are illegal because they run on Ethereum, but I think some of these things are illegal securities, and I'm surprised they're allowed to go.
Yeah, I mean, there's actually an interesting thought experiment around the fact that maybe securities law in and of itself is outdated, right? Obviously a lot of these ICOs were either direct scams or indirect scams because they didn't understand like fundamentals, and they're creating promises that could never be fulfilled, right? But there's sort of this other component to it, which is like being able to raise money from the average everyday person, and how much regulation, red tape there is for that
Right.
as it exists, right?
Right.
And
Because
it
I
costs,
did want them to
costs a lot
tear
of
that
money.
down. Right.
Yeah. So one thing that it kind of showed, you know, is that you know that there actually is some kind of an opportunity to create better regulation around that. Of course, you know, I think that what happened in the ICO world was like, you know, one of the worst ways that it could be done because of the reasons that I mentioned. But it does kind of point out to that there is this kind of like situation where like the average everyday person is unable to invest into you know startups and get access to outside gains that
I totally
you know,
get.
accredited investors do, right? And but yeah, I mean, it's
I like that notion. I really that was something that really appealed to me, and it still appeals to me. Yeah, I really get that. I think that makes a lot of sense. And with the stable coins, I think it's going to be interesting because what I to kind of building on that point, I like that they kind of usurp a little power from, you know, they kind of like you have the euro dollar market and you kind of have these other dollar markets, digital dollars. I'm kind of curious how that gets treated down the line in terms of regulation and sort of reserve requirements, if that gets instituted, and how they would track that and monitor that. And I would even be curious before all that, what the Fed thinks of all these stable coins representing the dollar. Just what they think of it, you know, at the coffee table, you know, on a Friday night, like, you know, what they might make of.
You know, I thought of something interesting. So you know, I always thought of CBDCs as like kind of this kind of silly thing because what's the point of a CBDC if you know they want to have more control, but actually like the point of a cryptocurrency is to you know remove control from centralized authorities, right?
The irony.
And one of the ideas that someone had was like actually they want more people to get access to dollars, and so it's actually potentially like the U.S. government's attempt to breach like capital controls of other countries, limiting other countries' abilities to access the dollar, thus getting more dollars out to people, and you know essentially you know being able to print more money and have less of an effect of inflation at home in the United States, right? Which is it's a pretty interesting theory. I would be wowed if the powers that be were really so intellectual to actually get to that point. But
I thought the
it's a
Trojan
fun
horse.
theory.
I think Facebook's biggest mistake, and depending on how Meta goes, and I don't think it's going well per se so far, but there's probably a lot of money made in VR, but not rolling out a dollarized Facebook coin. If they had done that instead of Libra, which was going to be a basket of goods or whatever it was going to be, and just rolled out a 1-to-1, I think that they could have been, and they are, but I think they could have further embedded themselves with the United States government and been a monetary colonizer for them and exported the dollar into all these places that have Facebook, but they don't have Bank of America or, you know, access to, you know, the US dollar rails. And I think it was just you know, I think that if they had done that, I think they could have gone further eventually and then mixed it and made it a basket of goods and eventually made it their own thing. And gotten to where they want to go longer term. And I think they missed a tremendous opportunity there. I was really surprised.
Yeah, I mean, I hadn't thought about that before, right? That you know maybe they should have just started with
Just the 1-to-1
coin
dollar, and the government would have been, I think, cheerleaded it the whole way, and then they could have. I mean, it would have been the biggest network in the world right away.
Yeah. Valid.
Um,
Yeah. I think that yeah, it's going to be pretty interesting to see what. I mean, it seems like the U.S. government is keenly interested in stablecoins for now, especially after the Terra Luna debacle, right? Um, and of course, how do you really control, like, how can you really regulate like an algorithmic stablecoin, right? You can't. It's like impossible, right? Um, uh, like you could stop U.S. exchanges from trading it, I guess, but it's still going to be there. Um,
wasn't that like a
uh,
5-year-old coin? Like,
Honestly, I don't know. I
I
just I just remember hearing about it, and I was thinking, oh man, this is everywhere. Like I gotta learn about it, and I just
I didn't know
put
anything,
off
but
learning
right.
about it until it
But
crashed.
in my little bit of research, I mean, the coin wasn't brand new though. It wasn't like it came out in 2020 or 2021. It just the long arc of that kind of scam to me is just amazing. Some of the
Yeah.
investors in that coin, I think, Binance or however you Binance, I don't know how to pronounce it. I just only read it. They invested in like 2017 or 2018, like $500,000,
Mm.
and sat on it. It's just interesting that it was well connected from a little baby coin so early. It's just interesting. And then these things get spun up. Um,
I mean, it's just a classic sort of failure of understanding fundamental, right? Like, um,
yeah, the people
when I
that
actually learned
believed in this.
when I actually learned about it, I realized that it basically all depended on um, uh, people sort of continuing to believe in what is it, the Luna token, right? Because I mean it all basically broke down because it lost peg and people stopped believing in the Luna token, and once
Stop
people stopped believing in it, the algorithmic stability failed completely, right? um and I remember there was back in the day there was like the BitShares token, and it had like a similar functionality, um, where where it worked and everyone made lots of money as long as like um, people continue to buy the volatile token or something silly like that, right? Like as long as this volatile token continued to go up in value, uh, then you could earn interest on like the stable coin, and the stable coin would maintain its stability. And it's you know these things kind of get very close to like a Ponzi scheme, um, well, and a lot of this yield stuff too. It's like all yield is like a redistribution of wealth to the people who have the most, right? Um,
Yeah,
it's,
where does the
I
yield
mean,
come from?
not,
The yield come from,
yeah. Well, I mean that's more like the staking stuff, right? That's like staking stuff, right? The other, there's either like inflation being with that redistributing to the people who have the most, or you have essentially an unregulated bank taking higher risk with your money than you realize, right? Those are the two options for yield, and uh, obviously, um, that whole debacle was also found out in the most terrible of ways.
right.
Um,
Which was bigger to you? Felt bigger to you at the time, Mount Gox or Luna?
Mount Gox or
Not
Luna?
that either one of these have
Um,
anything to do with the Bitcoin network, but what, in terms of how they felt to you, or, the news they were making, and sort of the
well,
reactions,
I
what
would say
felt
that.
bigger?
Well, I would say that Mount Gox was bigger. Luna affected more people, but Mount Gox was a more serious threat to the growth of of Bitcoin and really all of cryptocurrency, right? Um, because Mount Gox was like the exchange, right? And it went down, and so um, such a huge part of the ecosystem was affected, and it really damaged the reputation. I think that Luna did damage the reputation of stablecoins, but not in the same way that Mt. Gox damaged Bitcoin's reputation. As I said before, I mean, that happened, and all of a sudden, like, you couldn't talk about Bitcoin anymore, right? Like to in business settings, right? And you don't have that same effect, right, with the Luna thing. I mean, lots of,
good point.
I think that people lost a lot more money with Luna, and that's absolutely terrible.
It's all relative,
right? Yeah.
You mentioned way in the beginning of the show, running into like people like Vitalik. Did you get to talk to Vitalik?
I did. I tried to talk to him, but back then he was a lot more shy. I mean, I don't know if he's still shy now, but back then it was hard to talk to him. Like, not because, he was such an influential guy. He's just, he was just a hard guy to talk to. I remember going to like a hacker house, and it was like 30 of us, and Vitalik and Gavin Wood was there, right? And Gavin was the guy doing the pitching, and Vitalik was just sort of sitting in the back coding on his computer. I still remember him talking about use cases. Like, one of the use case that he was talking about for smart contracts was like, you're having a drug deal, and like, if you have like a hitman on the side, and if like you don't get paid your money in the drug deal at a particular time, like it's not gonna it's not gonna stop the hitman from coming in and killing the other party. And it was a funny thing to hear, right, from like the people who created Ethereum, talking about like these kinds of use cases back then. I ran into him at like a party at like, I think it was like the Luxembourg consulate or something like that, and a few other events. But I wouldn't say that we ever had like a really deep conversation. I've had better, deeper conversations with like, the Winklevoss twins, or Brock Pierce, or Matthew Rozak, or
What was the conversation with the Winklevoss twins like? Was it Bitcoin oriented?
It was more business. So we've been we've been collaborating with them on a lot of stuff. So it was more just like, we're a customer of Gemini, and they want to like learn about how we're using them, that kind of thing. So yeah.
Interesting. So that seems like they're pretty hands-on then, with running.
Back then they were.
Okay.
I don't now. I think they're like starting bands and stuff. So, but we exchange emails maybe from time to time, every once in a while. But I remember one of the earliest conferences that I went to, some like after party. Like, there's this company called Coinsetter, and they ran a Bitcoin exchange that eventually got bought by Kraken, and they were like one of the leading Canadian exchanges. And like the guy invited me to like an after party where they rented out the bar at the bottom of the Cosmopolitan, and then there was like, after that ended, he invited me to like another after party, which was at the top of the Cosmopolitan at I forget whatever the name of the club is up there. There's this like huge line, and he like goes up the bouncer and he says something, and he's, oh, okay, and we all, like, this like group of like 8 of us, we all go in like completely for free, like cut the entire line, and then we go up to this table, and I was kind of like the new guy. This was back in 2015. Like, Bitwage didn't have much traction at the time, and like I realized that this was like Brock Pierce's table, and like Brock, like and like a bunch of like old school guys are there. There's like Brock Pierce, there's Anthony Diorio, there's Tone Bays, just like a bunch of people like that who back in the day like weren't as like hugely influential as they are now. Still, they were still like known, but not to the same degree as now. And I remember just kind of being scared to like drink the alcohol, because in the past, like, I didn't want to just like be the guy that like goes to someone's table and like drinks all their alcohol. And then after, like the third or fourth bottle of Grey Goose coming, I'm like, oh, okay, this is kind of like an open tap kind of situation. And people were like dancing on tables and throwing ice at each other. It was pretty fun.
Yeah, that sounds wild. I mean, do you think the next 10 years are going to be as wild as the first?
I mean, it seems to me like it's getting less and less wild, right?
Yeah.
There's still people doing all sorts of crazy after parties, but I think it's not quite the same, right? As it was back then. So
yeah,
and I'm also older too, right? I mean, back then I was like, mid early 20s, like, so I was ready to go, and now I'm like, I have a kid and I'm tired all the time.
yeah. It seems like a lot of the people from the earliest days either came and went in some way, or maybe got a little too close to the sun and launched their own coin. Like it wasn't a lot of people who kind of came for the gains and stayed for the money. So yeah, I mean, I don't know what your take on that is. Just, I mean, you're one of those people that found it really early, really young. You've stayed. You get Bitcoin. You didn't launch Bitcoin Green.
Yeah, I mean, we actually did at one point during the ICO craze think about doing an ICO, but I wanted to like do it right and like actually have it be a registered security. And then it was like, it was going to cost like $200,000 or something to do that. And I was like, holy shit. Like, I guess we'll just skip this one. Yeah, I think that, we're one of the oldest companies. We've been around for a while. We really have deep expertise when it comes to like crypto and payroll together, right? I mean, I don't believe there's anyone besides me and my co-founder that really know that market as well as we do, right? Maybe we didn't cash in on some of those other crazes, but it's becoming more and more obvious that crypto payroll is going to become, just everywhere. And we've created the set of tools that I think are going to be needed for that to actually flourish, for that to actually happen, so that we have, a flexible enough of a system that it feels just like getting paid actual dollars, but you can actually control your money if you want to, right? And I think that's where we are now, and I'm very excited to be here.
Yeah, it's super exciting. I like I said earlier, I'm a user. I love when I get paid in Bitcoin, and I do that through Bitwage. I've done that with vendors who've sponsored the show, and it was way easier than I thought to get involved and set up. It was seamless. I did have a question or two that were kind of silly, but I got help right away, which was great. And I was able to just solve my own user errors. But like, so it was pretty simple. And it's really, I say this all the time. It's not about how much sats you have. It's those first sats set you free. And I really mean the ones though that you take custody of. So getting paid in Bitcoin, and it doesn't have to be 100%, is a new level to that. And so I appreciate what you guys are doing, and it's helped me out and connected me with employers and vendors. So thank you so much. I've enjoyed this tremendously. I'll leave it to you for any parting words and to let people know where they could find you and of course Bitwage and what Bitwage does in their services.
Yeah, I mean, this has been fun. I lost track of the time. But yeah, come check us out, bitwage.com, www.bitwage.com.
Awesome. And I'm sure on Twitter as well. It's at Bitwage, right?
Yeah.
So
yeah, at Bitwage on Twitter. We're on LinkedIn, Facebook, Instagram, all that good stuff. But yeah, Twitter, we're very active there.
yeah, now's the time to get paid in Bitcoin and DCA during the bear market. Put a little bit in. This is the time. So thank you so much, Jonathan. This has been dope. Yo, thank you for listening. Please make sure you're subscribed to the Bitcoin Matrix podcast so you don't miss out on any fresh and dope content. I want to thank Jonathan Chester from Bitwage for coming on the show. I also want to thank our sponsors, River, CoinKite, and the Bitcoin Conference. If you're digging the chat, all I ask is that you leave a 5-star review wherever you listen to your podcast, because that's the best way to spread the word so I can keep grinding out thought-provoking conversations about Bitcoin. Keep learning, keep stacking, and stay laser focused out there. This is Cedric. Peace.